Nowadays, IPOs are the flavor of the season. Yeah, everybody wants to invest in the IPOs and everybody wants to rake in the moolah when the market is hot. Now, many a time, it so happens that our office colleagues or our near and dear ones tell us that I had invested in this XYZ IPO, and when the shares got listed, it listed 200% high, and I immediately made so much profit, XYZ, etc., etc., etc. And you start wondering that this term that is used right now, FOMO, that really seeps in. That fear of missing out, that did I miss the rally? Yeah, did I not take the decision at the right time, or did I not decide at all? And it is my mistake that I had to invest in such IPOs and increase my wealth when the time was right. Well, the time is never right. Yeah, and please, please, please don't invest in IPOs just because your friends and colleagues and relatives have been doing it. Now, when you invest in IPOs, there are a few things that you need to keep in mind. Now, before I tell you about those key things, tell me one thing. When you approach a bank for a loan, does the bank give you loan on your face value? Does the bank give you loan on the basis of how many followers you have on social media? Now, if you have a friend who is a known entity in the society, say an actor or an actress, and you take him along with you, and does the bank give you loan just because you have that friend as your actor, that friend who is an actor who has come along with you? Well, the answer is a big no. The bank will only give you loan on the basis of your income statement. The bank will ask you for your income tax returns. The bank will ask you for any assets that can be mortgaged against the loan that they have given you. Isn't it? Yeah. Now, when you invest your money in a company, the argument that you might say that it is not a loan. Yeah, I am making a informed investment. Yeah. Have you really made that informed decision before you invest your money? That is the big question. That is the question which makes all the difference. Now, see, before you think of putting in your hard earned money in any company, there are a few things that you need to check. Firstly, the people behind the company. Who is managing the show? How are those people? What is their track record till date? Are they known in the business circle for their integrity, for their leadership qualities? Now, check, read about them. Second thing that you need to check is the business that the company is in. Why do you need to do that? If you don't know the business in which you are investing, yeah, are you putting your money blindly? It is the same as that, right? See, knowing the business is an important aspect of putting the money in the business. Why? Because if you believe in that business, then only you will think of investing money in it. If you don't know what the business is, if you don't know what the future prospects of that business are, then how are you going to reach a decision? Future understanding the business prospects also very important. Say suppose if the company is operating in a particular state, say suppose the company is operating in Maharashtra. For example, take a company like Chitale Bandhu, which is a very well known mithai shop in Pune. Now they have recently started opening shops all over Maharashtra by the name Chitale Express, where their products are available. Do they have prospects of growing beyond Maharashtra geographically? Yeah, is the kind of mithai and the namkeens that they sell in their shops, does it have market all over India? Can it become the next Haldiram? Think about it. You will get your own answers, right? Can it sell products outside India? Well, they do export their products outside India, but they mostly cater to the Maharashtrian community. Do they have prospects like say a Pringles or Lay's of expanding their business, not only for a particular community or particular nationality of people, but can it cut across all nationalities? If that is the prospect, yes, that is the business that you would want to invest your money in. Correct? Thirdly, what you need to check is the risk factor. Nowadays, in these times of internet revolution, which has been going on for so long, yeah, things which are relevant today become irrelevant in the future. Take, for example, the OTTs that have overtaken the cable TV that we had in our houses. Yeah. The time is not far when OTT will completely replace the cable TV networks, isn't it? Yeah, this is just one example that I'm giving you. That is what came to my mind right now. But how risky is the business? Can it go on for a long period of time, or will it become redundant because an alternative technology will enter the market and the business of the company will no more be in demand? Very, very necessary to think about. Correct? The next factor that you should read, you should learn about before putting your money is the profitability of the company. How profitable has the company been till the IPO stage? Has it shown any signs of increasing that profit? Now, a very funny statement was made by the founders of PB Infotech, the company behind Policy Bazaar IPO. Now, the founder, in a statement to the news agencies, said that it is not right on the part of the people to just look at profits while investing in startups. Well, I beg to disagree with this person. Why? Because you put yourself in a position where you have not been earning anything till date. In fact, you have loans on your head, and you want people to give you money. Why? Because say 5 years down the line, 10 years down the line, you might start earning money. You might start making profits. Will you put your money in such a entity? Difficult choice, correct? So profitability is one of the factors that you should look into before you invest in an IPO. A company like ATM, which was made which is rather the biggest IPO to ever hit the Indian stock markets, even bigger than IRCTC. Now that company has never made profit till now, and it might not make profits in in for a foreseeable future period of time. Will you put your money in such a company? Well, if you have that risk taking ability, please go ahead, invest. But that is an individual choice. Make that informed decision. Correct? So profitability, a must factor that you should see before you put in your money in an IPO. And last but not the least, check out the debts that the company has. What are the loans that the company have? Yeah. Are they going to use your money to repay that loan, or are they going to use your invested money to expand their operations? If they are going to use your money to repay that loan, do you want to give money to such a company? Do you want to give money to a company so that it will help that company to repay its loan? You have your own answers to such questions, right? Now, these factors, where will you get information on these factors? All the necessary information that you need on these factors is present in the Red Herring Prospectus, or the prospectus that the company files along with the IPO papers. Correct? Read it, go through it, because it is very, very necessary that you make a learned, informed decision before putting your money. Don't just invest money in a company just because a friend has recommended it, just because one of your relatives has been investing in IPOs for a long time, and they cannot go wrong, and therefore on the basis of what they told you, you have been investing, you have decided to invest. Don't invest your money on such recommendations and talk. Why? Because ultimately it is your hard earned money that you want to invest in such companies. Why? With the expectations that they will increase in value and they will help you create wealth over a long term. Correct? If the company loses money, it is not your relative, it is not your friend who is going to come and pay you back. So make an informed decision. Research for yourself. Don't go on hearsay and don't fall to herd mentality. That is how IPO investing should be done, and I hope all of you follow it.